Hi, I am Amani from Group 3. Now, our group will be presenting our management accounting assignment, which consists of 4 tasks. These tasks include the business entity description, production details, operating budget, and budgeted statement of comprehensive income, as well as analysis and recommendations. For this part of the presentation, I'll be presenting task 1, which is the description of our business entity. Our company is Frosted Bakery Sdn Bhd, a small-scale manufacturer operating in the frozen and pastries industry. The company produces frozen food products such as curry puff and garlic bread for the local market. The business is funded through the owner's personal savings and investment, with capital ranging from 220,000 to 250,000 ringgit. The company is located in Eco Majestic, Semini, Selangor. The managing director of the company is Khairul Almi, who is responsible for the overall strategic direction, growth, and performance of the business. The operation director is Asfar Harry, who manages factory operations, machine maintenance, and electricity usage. Meanwhile, Dayan Trisha serves as the finance director and is responsible for the budgeting, financial management, and financial reporting.
For task 2, I will explain the two products produced by Frosted Bakery Sdn Bhd, which are curry puff and sardine bread. Firstly, our curry puff with the product code CP02RSORM7 per pack. What makes the product attractive is the crispy pastry skin and spicy chicken curry filling, which suit the taste preference of many Malaysians. Based on our sales forecast, we expect to sell 5,000 packs in Q1 and 600 pack in Q2. This increase shows that we expect higher customer demand in the second quarter. To produce curry puff, we use flour and chicken filling as the main ingredient. Besides that, we also require workers to prepare the dough and package the product before they are sold. Moving on to our second product, which is sardine bread. With the product code GB02, the product is sold RM10 per pack. The main selling point are its soft texture and homemade recipe, giving customer a fresh and traditional taste. For sardine bread, the estimate sales are 4,000 packs in Q1 and 500 packs in Q2. Similar to curry puff, the sales are expected to increase over time. The main ingredients used are sardine and bread, while the production process also involves dough preparation and packaging worker. In addition, the company must consider overhead costs such as factory electricity, machine maintenance, and factory rent. There are also selling and administrative expenses, including advertising, salesman salary, and office salaries. Overall, this estimate help Frosted Bakery plan its production activities, control costs, and ensure that enough products are available to meet customer demand. That's all from me.
I will explain about the operating budget assignment for Frosted Bakery Sdn Bhd. Let's start with our sales budget. For Q1, we expect to sell 5,000 packs of curry puff at 7 ringgit each and 4,000 packs of sardine bread at 10 ringgit each, bringing our total revenue to 75,000 ringgit. In Q2, our demand is increased. We project sales of 6,000 packs of curry puffs and 5,000 packs of sardine bread, raising our total revenue to 92,000 ringgit. Next is the production budget, which determines how many units we actually need to bake. To find this, we take our expected sales, then add our planned closing stock targets and subtract our opening stock targets. And for the first quarter, this formula leaves us with a required production of 5,100 units of curry puffs and 4,100 units of sardine bread. And for Q2, we must produce 6,100 units of curry puff and 5,100 units of sardine bread. The third subtopic is I will explain about the direct material purchases budget. To make these pastries, we trade four major raw materials which are flour, chicken filling, sardines and bread. By converting our required production units into kilograms, we determine our total raw material usage. After adjusting for opening and closing measure stock, total purchase cost for quarter one is 25,375 ringgit. And in quarter two, our total raw material purchase cost is 24,150 ringgit. The next one is I will tell about the direct labor cost budget. For our workforce, we employ dough preparing workers and packaging workers. In quarter one, the combined production hours require a total labor payout of 20,220 ringgit. However, in quarter two, as production volume scales up, our direct labor budget increases to 24,420 ringgit. Next is I will explain about the production overhead. Our factory overheads include variable utilities, machinery maintenance, and fixed rent. This gives us a total production overhead of 4,500 ringgit for quarter one and 4,900 ringgit for quarter two. Based on our planned production units, our overhead absorption rate, which is OHA, is calculated at 49 cent per unit for quarter one and 44 cent unit for quarter two. The next is our selling and administrative expenses, covering advertising, salesman and office salaries, and freezer depreciation. These remain relatively steady at 7,550 ringgit in quarter one and 7,800 ringgit in quarter two. The second is our manufacturing accounts and product costing. Moving to part B, we consolidated our costs into a manufacturing account to calculate the total production cost. For quarter one, combining our raw materials consumed, direct labor and factory overheads gives us a total production cost of 62,912 ringgit 50 cent. For quarter two, the total production cost is 40,670 50 cent. When we break this down into individual product costing statements, a single pack of curry puffs costs of 6 ringgit 35 cent to make in quarter one and 6 ringgit 48 cent in quarter two. A pack of sardine bread costs 8 ringgit 47 cent in quarter one and 8 ringgit 61 cent in quarter two. Finally, let's look at the bottom line in our budgeted income statement. In quarter one, after subtracting our cost of goods sold from our 75,000 revenue, we achieve a gross profit of 8,521. After deducting non-production overheads, our estimated net profit is 971 ringgit. In quarter two, business improved significantly with higher revenue of 92,000 and optimized manufacturing flows. Our gross profit jumps to 16,881, leaving Prostate Bakery with a strong estimated net profit of 9,091 ringgit.
Calculations above, the performance of Frosted Bakery indicates a positive growth, especially in their net income. The revenue from sales also increased by 17,000 ringgit in quarter two compared to the sales revenue in quarter one. Aside from that, the production budget also shows an increase along with the direct labor budget. This is due to the increase in production and expenses in the operating process. However, the net operating profit shows an excellent jump despite of the increase in cost, proving the customer acceptance and the company good strategy in promoting their products. I will give 3 recommendations for Frosted Bakery that they can improve in the upcoming quarter. Firstly, I would like to recommend them to strengthen their advertising strategy. As you can see in the assignment, the closing stock for each quarter keep increasing consistently. Maybe it doesn't seem like a big problem now, but this can indicate a bad distribution and promoting strategy of their products. Aside from that, the finance director can recommend bulk purchase from supplier for high-priced materials such as sardines to settle the problems on high material costs. This can result in better cost control and higher net profit. Lastly, the business can also improve their direct labor usage as it shows a concerning absorption in costs. Instead, they can find a proper machinery that can help in reducing required hours per unit while also improve in labor cost.